This is your Wall Street wake-up call. The British pound plunging to a 31-year low against the dollar as Brexit fears come back into focus. Joining me now to discuss this is Russell Price, a senior economist at Ameriprise. Russell, it's great to have you here. Obviously a great time for Americans to go to the UK with the pound's weakness, but is this a window into how the markets will be as we get closer to Brexit? Because these declines were triggered largely in part by UK Prime Minister Theresa May saying that Article 50 will be triggered in about 6 months.
Yeah, I do think that it is an additional market reaction to the uncertainty of what that will actually bring, not just 6 months away, but within the next 2 years as the new trade agreements with the continent, the remaining EU members, is finalized. So it does offer uncertainty, to be sure.
And you say, though, that Brexit may not be a disaster for the UK economy, at least with the pound's weakness right now.
Sure, I think it'll be a headwind for the UK economy, but I do not think it'll be a disaster. For the financial services sector that has been based in London for so long, certainly that could be one of the most significant challenges. But the lower value of the pound certainly should be good for the UK's exports to the rest of the world. And also it should be very good for tourism as well. So I think the UK economy in general should hold up rather well.
Although there is concern that the UK won't be able to remain in the EU single market. I mean, talk about the significance of that factor.
Right. Yeah, I think it's unlikely that they'll remain in the single market. They should continue to have relatively good trade agreements because the continent, or the remaining EU members, still export more to the UK than the UK exports to the continent, so to speak. So the businesses that are continent-based, they want to see a good agreement, and it benefits both sides. Certainly the leaders currently, they do not want to be seen as giving a very good deal to the UK. They want to maintain a tough stance just so that it doesn't encourage additional factions within the remaining members from maybe choosing the same path.
All right, and we should point out that this is a 2-year process, this Brexit process. So in terms of the market's point of view, is it episodic volatility? In other words, we're seeing the FTSE 100 rise right now, but U.S. stocks are not really reacting to this. So is it sort of, ebb and flow for the next 2 years?
Yeah, I do think so. And I think with a lot of these challenges or these uncertainties that arise, certainly in June 23rd, it was a tremendous uncertainty because no one expected it. But yeah, absolutely, the market will take each footstep with a little bit of unease, show some apprehension over the whole process, but I think settle down over time and the world goes on. I don't think this will, in history books, be a significant development for the overall economic activity, certainly a significant development for the EU relationship in general.
Yeah, and before we let you go, of course, we have an IMF meeting this week. They have a lot on their plate, not only with Brexit, but also concerns about the U.S. elections. What's your take on where we are with the global recovery? Growth is obviously somewhat sluggish.
Certainly, it's been sluggish, and it is likely to remain sluggish, but maybe not quite as sluggish as it's been over the last year. Here in the United States, the largest economy in the world, we've had an inventory correction over the last year, but the positive thing is that that's mostly behind us. We also had a downturn in business investment spending, a lot of that because of the energy sector reducing its investment. But now that oil prices have seen some stability and even bounced a little bit, I think that the business spending does seem to be coming back and stabilizing. And so here in the United States, we expect things to get back up to prior levels, somewhere in a range of about 2–2.5% in that range. That should be good for the rest of the global economy. Certainly there's some threats, but generally I think it's still good.
All right, Russell Price, we'll leave it there. Thank you so much for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.